Hello and welcome everyone to the live commodity market analysis with the Gold and Silver Club, presented by myself, Phil Carr, for the 25th of February 2016. So during today's session, we will, of course, be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will be covering an overview of the commodities markets. We'll review the top trades of the week, live market commentary and technical analysis. And of course, we'll be answering any questions that you may have during the course of today's session. As always, we will keep it very interactive. If there are any questions as we're going through each one of the commodities, do let me know. We can definitely go through that. Perfect. Okay, so before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the world's #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading, and as internationally respected experts, our analysis and the opinions on the metals, energies, and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, Global Banking and Finance Review, and the Wall Street Journal. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate a substantial monthly income through commodities trading using our signature trading strategies. So for more information on the Gold and Silver Club and our expertise, please do go ahead and visit our website, which is www.thegoldandsilverclub.com. Okay, fantastic. So what we'll do, we'll move over and we'll have a look at gold at the moment. So gold, we can see, is currently trading at $1,235 per ounce. We'll take a look at that very shortly on the charts. We'll go through that in a lot of detail. So it's been a nice move on gold over the last week. Before I do so, we'll review the top trades that we've had over the last week using the Gold and Silver Club signature trading strategies. So let's go through those with you. So first of all, there's been a really nice opportunity to get back into cotton for a sell short. We've been in quite a distinct downward trend throughout most of 2016. So there's a very strong signal just last week for a selling opportunity, which we've banked now with over 220 points gain after we had a significant sell-off last week. Gold presented another opportunity to add to our buy positions just this week. In fact, we had a lovely pennant formation, which was lining up for a breakout on Tuesday, followed through really well yesterday. So we caught our breakout trade. In fact, we actually ended up catching 300 points on that breakout. We do still have longer term positions in gold at the moment, but that was a nice swing trade as well, just to add to our existing positions based on the pennant box setup, which was lining up really well for a breakout. And we've also continued just to be in a longer term trade here, which we've caught on light sweet crude oil, which was right off the lows from last week when we came for a very you can see just at the lower end of the trend line, we came for a very nice pullback there. And we've essentially had a nice move over the course of the last week. We can see light sweet crude oil currently trading at 131.98 at the moment. So I'll talk you through that in more detail very shortly in terms of the actual trade ideas that we're looking at as we head into this afternoon. But it's been a good week, definitely, for commodities. Lots of volatility, which is what we like. So what I do, I'll move it over to the technicals. We'll go through each of the charts. If you do have any questions or comments, do let me know. Okay, so I'm going to be working off raw charts for today's session. If we need to go deeper into analysis, we can do so. Raw charts are quite nice sometimes because it gives you very clear price structure without any indicators and so forth in the way. So we'll just be working off these raw charts for the overall price structure as we go through each of the markets, analyzing them. If we need to get into more detail with more indicators, we will do. So first of all, we'll just start off with gold here. Essentially, gold had another nice pop to the upside just yesterday. So we caught this breakout of a pennant formation. Pennants are a very good way actually to trade breakouts in gold. If you go back in the chart, I can just show you a recent pennant here as well, just going back to August last year. These pennant formations, often when you've got high lows in the chart, lower highs, they develop into a nice pressure point on the market, and often these develop into good breakout points. So you've seen quite a few of these over the last few months on gold, and this was a really good pennant forming after the breakout that we've had to the upside over 2016 so far. So in terms of gold, where are we sat at the moment with gold right now? Well, gold currently one of the best performing asset classes of 2016. It's up 16% year to date. Some incredible moves. And if you're not aware at the moment, Just to put this into context of where the funds are really flowing, the assets in the SPDR Gold Trust, GLD, the top gold-backed exchange-traded fund, has risen by 2.64% to 752 tons earlier this week. It's the highest since March 2015. On Friday, we saw the biggest increase of funds into the SPDR Gold Trust that we've seen since August 2011. Okay, so the biggest one-day inflow of funds in 5 years. So we can see where the institutional, the money is positioning themselves at the moment. We see where fund managers are positioning themselves, and already in the first 7 weeks of 2016, the funds coming into gold, the SPDR Gold Trust, have already surpassed all the funds which went out of it in the whole of 2015. So it gives you a bit of an idea of where position traders are putting their money at the moment. So we can see this in the overall price structure of gold, in the fact that even after we broke out to 1 year highs just over about 2 weeks ago, the pullbacks have been very shallow, right? So we haven't had really a significant pullback. For those of you who might use Fibonacci, we've not really pulled back significantly at all at the moment. So if you look at this in the context of the breakout, since we had the breakout, we came just shy of the 38.2 retracement level, but we've not really had a significant pullback on gold at the moment. Very shallow pullbacks have been bought into. So we currently still have another position running on gold right now. What I'm looking at in the short term here, a couple of factors. So number one, we did produce a rejection candle yesterday, which got formed by the end of the New York session. It is something to be aware of because we've also produced a similar formation on silver and platinum as well. And if they break down, we could start to see this correlation play out. So I'll talk you through those markets very shortly as well. Ultimately, with gold at the moment, if it can take out yesterday's high, so if it can get a break back above 1250 in particular, if it can break and close above that level this week, it bodes really well for gold. There are a lot of buy orders at the moment on gold sitting above 1,264 US dollars per ounce. If we were to break and follow through above that level, we could really start moving towards the 1300 zone. So it's something to bear in mind for gold. The overall move that we've seen at the moment is pretty strong over the course of this week, and certainly over 2016 has been spectacular so far for gold. Now, that's if we continue to follow through today. Now, the New York session will be the decider. So yesterday we saw a pop to the upside over the London session, followed through to New York, but by the close, we saw a lot of traders taking profit and getting back into gold here for a potential short, or just taking profit after the pop up to the upside. And we've seen this big rejection candle on the daily chart. If that was to break down either today or tomorrow, we may start to see a reversal, because essentially that would put in a lower short-term high on the chart. And if we were to see this level, you've got a supportive level just underlying around 1215. If we were to break down from that level, we could get a reversal, break the low of this trend line, and start to rotate lower. So it's just something to bear in mind at the moment on gold. And what I'm looking at very closely is the inverse correlation to the stock market and also to oil right now. So if we just move over, and I'll show you this on the S&P 500. We have a look at the price structure of the S&P right now. It got sold into yesterday. So when it was selling off, it was breaking down over the course of the US session. The earlier part, when it was breaking down, it helped gold break out to the upside. However, into the close, we saw some big buying into the S&P. You can see here where it ramped right up towards the daily highs, produced a big rejection candle on the daily chart, and we saw the inverse correlation with the metals, particularly gold, formed a big inverse hammer rejection candle on the daily time frame. So it's this price structure I'm referring to here. So essentially the S&P 500 and also oil today, if they break above resistance and they follow through, there's quite a lot of clean air that they can break out above. Okay, we've got this basing formation at the moment, but it's not a confirmed move at the moment. We're just sitting underneath key resistance around 1943. I'm not looking to directly trade equities here. I'm looking at the inverse correlation. I'm looking to trade the oil breakout if we get a break above with equities, and I'm looking to potentially take some more profits off the table with gold if we were to break down and then get back in at a better entry price. So that's why I'm interested in equities right now. So some facts for you on the equities. It's the strongest correlation we've seen in 26 years between the S&P 500 and oil. So at the moment, if we were to see a breakout with the S&P and oil at the same time, that would put pressure on gold. We'd see funds come out of gold and potentially then moving back into equities and oil. So we're watching this very carefully because of the rejection candle we formed yesterday. That tells us buyers got back in control of this market by the close, and you've got the potential for a base hit, a W-shaped reversal pattern, neckline overhead. I'd like to see, even if we break above that level, really needs to break and close above that. Now let's move it over to oil. So if we have a look at Brent crude oil, at the moment. We had also, even after awful inventories yesterday, which showed again a surplus in oil, we did see some support for oil into the close. We produced on Brent here again a rejection candle. You can see it is creating higher lows on the chart. It's got this overhead resistance here sitting at $36 per barrel. If it was to break above this level and follow through, we would see equities follow through as well, and that puts pressure on gold. So we're watching this very carefully. So we've already seen yesterday's high taken out here on oil. I'm looking to see, you can see the previous low that we broke in, this is December 2015 lows. We broke that at the start of January. Now previous support has turned resistance, so $36 per barrel is very important for Brent. I'm looking very closely here to see whether we'll either continue to consolidate around these levels, or whether we'll have a breakout to the upside. Another market you want to have a look at is the VIX, so volatility index. And right in the moment, you've got this inverse correlation with the volatility index and also with the stock market. So essentially, it measures fear in the market, and you can see fear. You can see here that fear is reducing over the course of this week. We're seeing this starting to break down, and if we were to see this follow through for more downside here, so this is the VIX. You've got completely the opposite correlation, right, to the stock market. So if you look at the S&P 500, the overall formation here, you potentially got a double top on the VIX. If this breaks down lower, you're likely to get a breakout to the upside for equities. So it's just something to bear in mind at the moment, that it is starting. It's come down so far today, and everything is to be decided, I would say, during the course of the US session this afternoon. Now, if we go over to news announcements, we've got core durable goods orders coming up in about 20 minutes time, unemployment claims coming up in 20 minutes. So that's going to provide some volatility over the course of the US session today. So that's important, coming up in about 20 minutes time. So that really could tell us which way the markets are going to go over the course of the US session today. Now, I also want to bring your attention over to light sweet crude oil, which also initially broke down yesterday and then got heavily supported into the close. Another rejection candle. Again, you've got this formation just overhead here where previous resistance is turned support, $34.50 per barrel. For those aggressive traders, some aggressive traders, you might wish to look at this as a trading opportunity based off the rejection candle yesterday. At the moment, fundamentals, yes, they are bearish for oil right now. However, we are structurally building a little bit of a base at the moment, and there are some key moving averages which we're starting to close above for oil here whilst it's basing. So it is decision time, I would say, over the course of the US session today to see if this can follow through. If it has another failed test of resistance here, yes, it could rotate lower. We are seeing rallies keep getting sold into with oil. It's quite volatile at the moment, so you just need to know what you're doing if you're trading oil in these current market conditions. But I do see there is the potential for a basing formation on both Brent and also light sweet crude oil. I'm looking at the inverse correlation. Okay, so if I see a breakout, particularly with Brent crude oil, if it breaks above resistance, if it can break above $36 per barrel, close above that level, which is really important, it will put pressure on the metals. Now, if you go over and have a look at the overall price structure of silver at the moment, silver is starting to develop what we would refer to as a V-shaped reversal pattern. You might even call this a head and shoulders pattern. You could argue there is a bit of a head and shoulders forming at the moment where you've got, let me just show you that price structure and you can have a look at that, see what you think as well. So you've got the head there, you've got the left shoulder, we've got the head, and then we've got the shallower right. That was the breakout actually from yesterday. You've got the right shoulder and you've got the neckline underlying underneath. Okay, so we've essentially, it's a V-shaped reversal pattern, but you could argue it's a short-term head and shoulders pattern there as well. If we take out $15 per ounce here on silver, this is where I could really start to see some momentum to the downside, and I suspect it probably won't cause as a severe pullback on gold, but it will correlate, and I would expect gold also to follow suit. There is quite a lot of clean air here as well for silver to drop about 50 cents. If it was to break below $15 per ounce, it could easily come down to $14.50 level. There's not really much to stop it from doing that. You've got previous resistance sitting around $14.50 to $14.60 here, so I could easily see that breaking down, but it's not confirmed. But if it did break down, if we saw equities rally this afternoon or tomorrow and we start to see a breakout on oil, then I would expect this pullback. You may or may not have seen this yet, but it is worth bearing in mind as well. Have a look at the S&P 500 on the monthly chart. Monthly chart, you've got a massive rejection candle at these key lows at the moment. So I'm not saying that the stock markets are about to turn around, or they are rolling over. A lot of these rallies will no doubt get sold into in the coming months. But in the short term here, we have to pay attention to the price structure. And the price structure right now is rejection of the 1807 level. You can see that a number of times. The monthly chart is showing us a very strong rejection candle. We're coming into the last week of the month. Monday will be the last day of February, so this candle should be fully formed by then. The weekly chart, you can see very strong rejection again around these levels, and the daily chart. It's not a confirmed move, but I'm definitely keeping an eye on this because I want to see where the funds are flowing in order to take the best trades possible on the commodities to have the biggest edge with our trades. Now we'll move it over. Also, just have a look at platinum. Similar situation on platinum. Now platinum is either setting up here for a bull flag formation, so it's just a temporary pullback and it's just going to break out higher. That would be confirmed if we got a follow through and a break above. So that could be just a bull flag formation, or it's the start of something bigger, a larger pullback here. Particularly if we take out this swing low below, we could start to see the price rotate lower again. We might get a short-term pullback. So I'm also monitoring platinum price structure and also gold and silver. Again, we've got positions on gold at the moment. It would be of benefit to us if gold broke out. I would rather it broke out to the upside than it sells off at this point. But I'm paying attention to what exactly the markets are telling us, especially the correlations here. So we're going to be watching those very carefully this afternoon. If we do see oil rotate lower today, it's likely to put pressure again on equities, and you'll see gold continue to build up momentum. In terms of our next positions on gold here for a breakout to the upside, essentially, I'm looking for follow through. I want to see a break above the yearly highs, which is at 1263. If you go over to the monthly chart here on gold, do note we're coming up against severe resistance going back about it's almost about 3.5 years here, going back to 2013. So we've got very clear resistance at this zone here, the upper end of the trend channel, and this is where we're sat on the monthly chart. So whether we'll be able to really follow through between now and the end of February, whether we'll break above this channel is to be seen. We've also got non-farm payroll next Friday, which can cause some volatility and profit taking ahead of that next week, but we'll continue to monitor this. But just note, this is the price structure of gold on the monthly, and it has been moving between these zones throughout the last 3.5 years. So we've had a rotation all the way back up to resistance, and it could be a zone where it gets a little bit, starts to stumble a little bit at this zone. Again, if we can break above 12 at 65, the highs from actually 2 weeks ago, but the highs from 2016, I would be looking for the next major zone of resistance to be between 1290 to 1310. That's the level where we previously come into a lot of resistance going back to January 2015 and also 2014. So that's the next major level if gold continues its momentum to the upside. We've broken above last week's highs. So far, I've got a bit of an indecision candle this week, but watching gold very carefully as we head into the US session this afternoon. So that's really what we're looking at in terms of the precious metals at the moment. So I will move over and we'll have a look at the grain. So first of all, we'll have a look at wheat. Now, wheat actually broke down here to 5-year lows just yesterday. So we did have quite a significant breakdown in price. Now, at the moment, wheat, it did form a rejection candle into the close. We're neutral on wheat right now. It might well be able to rotate back towards its upper end of the resistance channel here at the moment. One of the key points regarding wheat just at the moment has been on the fundamental side. Let me see if I can bring that up for you and just share my screen with you. And that has been actually, I'll just talk you through it. So essentially the CME Group wheat reports expected to reveal the reports which are coming out on Friday are expected to reveal problems with the quality of wheat. So from a supply to demand point of view, we've got more supply at the moment, which has caused this breakdown in wheat. However, it's starting to come up that that wheat may not be of the highest quality and could have high levels of vomitoxin, which is a fungus which could destroy a lot of batches of wheat essentially. So if that was to come about, we could see a breakout to the upside, which I'm keeping a very close eye on at the moment. So at the moment, staying neutral, very aware that we could get a follow through later on in the week. So just keeping an eye on the reports coming out on wheat. Ultimately, it has broken through key support at the moment, so it's better to be neutral this market. If we go over and have a look at corn is still consolidating between major support and resistance. There's no new setups on corn at the moment. Really, I'm looking either we've been looking at buying opportunities from the lower end of this supportive zone or selling opportunities from resistance. You can draw in some clear trend channels there. Essentially, we're getting into a pennant formation at the moment where we should get a resolution soon. You can see the price structure is getting tighter and tighter. We've come back down to the lower end of the trend channel. If we form a setup around this trend channel, the lower end, there's scope to potentially trade that back up to resistance. So we are keeping an eye on that as well, and just on the fundamentals too. Now, another trade which has been really nice over the last week has been cotton, which we mentioned we've been selling short. The overall price structure of cotton here has remained very bearish. We've rolled over since the beginning of the year. You can see we're coming down, retesting major support at the moment. So we've come out of that trade for now, but we are looking to see essentially any rallies to the upside. We're looking to sell into those at the moment. We've just had a move back down towards the lower end of this trend channel, so we'll be looking to sell into rallies at the moment on cotton. So just keeping an eye on any moves back up to resistance there. So I would keep a lookout for that. If you do trade the softs and you do trade cotton, technically it looks good for selling into rallies at the moment. Now, if we just move over and we have a look also, we'll move it over and we'll have a look at soybeans. Now, soybeans price structure, again, similar to cotton, we've similar to corn, is that we've got a bounce again off the lower end of this trend channel. So I'm looking to see whether we've got the potential to form a rejection candle into the close, in which case I would be looking at an opportunity to go for a buy here with soybeans if we were to find nice rejection into the New York close today. So you can see here we've got a nice rejection candle forming from the lower end of the trend channel. We may get a short-term buying opportunity here with soybeans. More interested today in oil and gold, but I am keeping an eye on these for just longer term positions on the softs right now. If we move over and we just have a look also, we can take a look at cocoa. And cocoa, actually, cocoa's had quite a significant pullback so far in 2015. Well, towards the end of 2015 and beginning of 2016, we've come all the way back to a major zone of support. I want to see whether, at the moment, we were actually looking at this to see if this again would be just a bear flag formation. It seems to be starting to break out from resistance here. You've also got an overhead neckline. We've had quite a significant move to the upside with sugar over the last week as well. So I'm looking, particularly with sugar here, I'm looking for the potential to get into this for a buy at the moment. Fundamentals, again, are supporting a potential breakout here. We had quite a large surge, a 7% surge earlier in the week on Tuesday. The indecision candle yesterday, but you can see you got this nice basing formation at the moment on sugar. If we break above previous support, which has been turned into resistance, I could see a potential for a breakout above $14 here. So I'm definitely keeping an eye on sugar as well. Got alerts ready to go. If we break above that level, we could look for a buying opportunity at the moment on sugar too. Coffee, we've also got on the radar. Coffee's just really consolidating at the moment. It's getting tighter and tighter. You've got some key overhead resistance at the moment. Again, very similar to the breakout that we've had, also the pennant formation on gold recently, in terms of you start to get tighter and tighter price structure into a pennant, and once you get a breakout of that pennant, normally you get a significant move. I'm looking to see which way this is going to break. If it does get a breakout to the upside, particularly if it gets above a key moving average, the 200 MA on coffee, I would look to take this for a breakout trade to the upside. So it's very oversold at the moment. I'd be interested in a buy on coffee if it does break resistance, but at the moment, again, just waiting for the price to come to us here, not getting into any trades until we have confirmation at the moment on coffee. Okay, good. Right, so in summary, I'll just double check any questions at the moment. Okay, good. If there are any additional questions, do let me know. So essentially, in fact, let me just take a minute to double check if there have been additional questions. Hold on, guys. If there are any questions, do post those now, and we'll just go into a summary very shortly as well. Okay, so in terms of key news items coming up, we've got in the next 6 minutes or so, we've got core durable goods orders and also the unemployment rate. So that will have quite a significant effect this afternoon. We should really start to see what the overall sentiment will be after that data coming out in the next 5 minutes or so. You can see again at the moment, gold, we've got a long position on gold at the moment. We would ideally like to see further breakouts to the upside. We're just keeping an eye on the inverse correlation with equities and oil right now. You can see right now, particularly we're at 1237, $1,237 per ounce. Again, just going back to the SPDR Gold Trust, we've had record levels of funds enter into that. Last Friday was the biggest one-day inflow of funds since August 2011. So we're seeing significant institutional money come into that fund and that is having a very positive effect here on gold as it's continuing to break out to the upside. I would look at a break above 1250 and particularly yesterday's high. If we invalidate that big rejection candle which formed yesterday, we could really start to ramp up, retest that previous swing high of 1263. A break above that level would be very strong for gold, and we could start to ramp up towards 1300. So definitely keep an eye out for that. On the flip side, if we break below 1215 today and we start to see that rejection candle taken out to the downside, that could definitely put some pressure on gold here, and we'll be starting to get neutral on gold and looking to get back into gold at a better entry. So we'll keep an eye on that. But currently we do have our long positions, which are currently free trades with our stop losses trailed on that move. So we've just got free trades on here. We can't lose on our gold longs right now. If I just show you the oil market right now, again, just in summary, Brent crude oil right now, it did get a pop to the upside earlier on today. I want to see if this follows through and breaks above $36 a barrel. A break and a close above that level would be strong for not only oil, but also equities as well. Watching that very carefully on Brent. Also, very similar price structure on WTI. Crude oil, a break above 34.50. We're a way away from that at the moment. Brent's actually closer to resistance than light sweet crude oil, but we did have quite a strong rejection candle yesterday. Looks to be forming a bit of a base, but oil's very choppy at the moment, so we could still see a breakdown low if we take out yesterday's lows here, to be decided over the US session today. And of course, we've got the Baker Hughes coming out tomorrow, the oil rig count, which incidentally, last week, the oil rig count, which came out on Friday, was very strong for oil. We saw quite a significant breakout to the upside after the oil rig count came out. So it is something to bear in mind. If you trade oil, you just need to be very aware of the oil rig counts, which come out every Friday. Baker Hughes at 6 o'clock London time. If we move over and just have a look again just at silver and platinum, I'm also just keeping an eye on this overall price structure. Silver did close with quite a strong rejection candle yesterday. If silver breaks below $15 per ounce, and more importantly, if it closes below that level, we could start to see things shift to the downside in the short term here for the metal. So I'm keeping an eye on that, the potential for that to break down. And also platinum, similar situation right now with the price structure of platinum, which is starting to roll over. But it could, if we break above yesterday's high, it could just be a bull flag formation. So essentially, that is what we're looking at. Reg, going on to your question, more so the main focus at the moment being on Brent and light sweet crude oil with the energies. That's more of our focus currently. And also, as I mentioned previously, we'll be watching very closely the correlation with stocks at the moment, the S&P 500. Another tip, I'm sure a lot of you are aware of this already, but if you're not, follow the VIX, very useful for the inverse correlation with equities at the moment, measuring essentially fear in the market. That's been selling off today. If it breaks down, you would expect also some support for equities as we head into the US session. And again, just for sort of longer term positions, I'm looking for re-entries here, looking at cotton for a potential re-entry. I'm looking for a breakout trade here on coffee. I'm waiting for the price action to really tell me whether we will get a breakout trade or not. It's just forming, just channeling into a pennant, but typically once a pennant actually gets a resolution, we get a really nice breakout trade on that. So keeping a very close eye on that. Yep, no problem at all, Reg. And yeah, I guess that is it for today's commodity markets with you guys. I do see some good opportunities coming up this afternoon. Hopefully we get some explosive moves, and that should really, I would say the US session this afternoon should really dictate the next short-term move here for oil, equities, and also the precious metals. So exciting times ahead. In fact, before I go, let me just quickly mention, for those of you who would like to get in touch with us and actually join us to trade live with the Gold and Silver Club, you also, by being a member of the Gold and Silver Club, you've got access to the Private Traders Club. As a member of the Private Traders Club, in fact, I'll just put the link in the chat for you there. It's essentially just www. The Private Traders Club.com. Okay, so once you're on that link, you'll be on the following page. So again, www.theprivatetradersclub.com. You've got the opportunity to join us for our live trading room sessions, which we host throughout the week, where we talk through our trade management of our positions. We go into more detail on the exact trades that we're taking, very deep into technical analysis as well as fundamentals, use seasonality as well, everything to really get the best edge with our trades. You can join us for our live trading rooms live throughout the week. You also get access to all of our trades that we provide, so our trade management system, which we utilize at the Gold and Silver Club. So as well as including entry, exit, take profit, you get updated with trade management, from anything from trailing your stop losses, banking your profits, and really making the most out of those trades, opening up take profit targets as much as possible in terms of trade management, so that you maximize on every single trade. You also get access to the Master the Markets trading course. So that really talks you through step by step, from everything from the indicators that we use, setting up all of your charts, risk management, super important, all of the strategies, go through in a lot of detail the strategies that we use at the Gold and Silver Club, so you can trade exactly the same way that we do, and you can follow us step by step as we trade during the course of the week. And of course, you get access to VIP email support, so whether any questions on the trading course, technical setups, market related queries, you can also ask all of your questions during our live trading sessions. And every single weekend you get the week ahead trading plan. So that puts together a very concrete plan for the week ahead. Our traders love that. Just a nice 20 to 30 minute summary really for the week ahead, which goes through all of the trading opportunities, major plays, major trades that we're in, any updates to trade management, new opportunities we're looking at, any major news coming out in the week ahead. We go from much higher timeframes to lower timeframes, really look at the markets in a lot of detail to really set you up nicely for the week ahead. So if you would like to get access to that, very simply, once you're on the privatetradersclub.com, go down to the bottom of the page. Are you ready to take your trading to the next level? Just click enroll here now, and that will take you through just to the enrollment page. Make sure you complete all the fields, and we will get in touch with you ASAP, okay, once you've completed those fields. Also, if you would just rather just get in touch with us, you can call us at one of our local offices. So just depending on where you're based, you can call either our UK office on 0207 193 0403, our USA office, which is +1 646 808 0403, our Africa office, which is +27 11083 8403, or our Asia office, which is +852 8191 0403. And again, just the link there, it's www.theprivatetradersclub.com. And again, just exactly what you get by being a member of the Gold and Silver Club. You get access to the Master the Markets training course, our live trade setups, trade management throughout the week, live technical analysis, our live trading rooms throughout the week, inside tracks, the week ahead trading plan every single week, and ongoing support and mentoring at the Gold and Silver Club. Okay, fantastic. So I think that's a wrap for today's session, guys. I don't think there's any more questions for today. I wish you all good trading. Have a profitable one, and I look forward to see you on the next one. And any questions or comments, do get in touch. And I really look forward to working with those of you who will be joining us at the Private Traders Club. Okay, guys, thank you. It's been another good one. Thank you, Dinda, for putting on today's session, and we'll see you all on the next one. Cheers, guys. Thank you. Bye-bye.